Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, November 19th, 4:55 p.m. Eastern Time, coming to you from cold and dark Mantua, New Jersey, with the often imitated, never duplicated Big Show. That's right, if it's Friday and it's me, you know it's the Big Show, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. State of the market, uptrend. Check over here at the trend gauge. Leaders, some falling by the wayside, but others stepping up to take their place. You can continue to make money if you are focused in the best of the best and stick to your stops in the market leadership in the current environment. So we're showing bullish uptrend on that. A little bit of a downgrade on short term as we've got small caps and the Dow Jones Industrial Average closing below their 21-day exponential moving average. So the yellow arrow has made its appearance, pointing toward neutral, but sticking with bullish as we've got all-time highs in the NASDAQ 100 and mid caps and the S&P 500 staying above their 21. 50-day moving average, our medium-term indicator, still firmly bullish, along with the 200-day moving average, which the five major indexes have been above since July 24th of 2020. So that's basically, in a nutshell, that's what we do it at, how we do it at Revere. We monitor 3 time frames across the 5 major averages, and then look to the leading stocks in the leading sectors, and put our money where those are. We basically invest in things that are going up and get the heck out of the way of things that are going down. So what happened today? A lot of volatility overnight. When I went to bed, we were firmly green on the futures. When I woke up, the only remaining green was the NASDAQ 100. We had a big dump in oil overnight as more COVID fears in Europe, including complete lockdowns in some of the countries over there, put some fear into the market, certainly in the oil market. And so we opened bearishly, as I mentioned, except for the NASDAQ 100, and that just continued to be on a torrid pace. You can see the numbers here. G5, the 5 growth ETFs that we focus on to keep our finger on the pulse of what's going on in mid and small cap growth land, down 0.3% on the day. We're going to take a look at all 5 of these ETFs later. One is a very big, standing out as a laggard, and I'm going to show you 5 charts within that that will explain that. S&P 500 down 0.14%. We're up about 0.3% before the Rittenhouse not guilty verdict came out. The market dumped after that. Don't know if it's related or if it's not. I'm just mentioning that's what happened. We couldn't really get back into the green to close the day. NASDAQ 100 firmly in the green, though, all day long, up 0.6%. Dow lagging as oils and banks hit it hard, down 0.75%. Mid caps down 0.4%. Russell down 0.9%. We're going to take a look at the market facts and the key levels, then the 21 over 21 list. But first, we're going to take a look at the team here at Revere. Completely transparent, fiduciary, put out content 6 times a week. We participate in uptrends, get out of the way during downtrends, and if you're interested in learning more about this approach, you can reach out to any of us. Dan's been hunting all week, but we've been holding the fort down for him. He'll be back next week, and I think we should pile a bunch of work on him after taking a week off. So anybody that's been thinking about calling and put it off, call Dan on Monday or shoot him an email. If you call him, the number's 855-REAL-WEALTH. That's 855-732-5932. You want to email him, it's dan@revereasset.com. You want to reach out to any of us, it's our first name at revereasset.com. We've made it very easy. You can email Tim, Hunter, Mural, Alex, or Don at revereasset.com. So let's get into the charts now, and the key levels and the market facts that we want to take a look at. So we're going to start off here with the S&P 500, and let's just review the state of what's going on right now. So one headwind that we continue to be concerned about, I'm going to show a chart of it here, the strong dollar. Typically, Dow type stocks underperform in a market environment like this because it makes their exports more expensive for other countries. Clearly seeing with the strong dollar here and the breakout above this 25.39 level. Not it's hitting commodities too, as they've been weak for the last few weeks. So that's the biggest headwind right now. We're bullish as long as we stay above the 21-day and 50-day moving average. We're going to continue to be bullish. Should we take out the 21, we'll start lightening up here. Bear cases have failed breakout below the prior all-time high of 45.46. Let's go back to the S&P 500. Take a look at that. Here's the 45.46 level, clean breakout here in mid-October, and just going sideways over the last 2+ weeks. This 47.20 area has been formidable support. Let's take a look at a 30-minute chart here. You can see every time we try to approach this 47.20 level, we've been rejected, including twice this week and today when we tried to break out. So that's the key level that we want to get across from a resistance level. So I mentioned the overnight negative reversal in oil, 6-week low on oil and that COVID resurgence. Big tech continues to be strong. Some portfolio changes today. We bought Unity Software, sold Boeing. Boeing has just been a garbage stock. Worked for one day when we bought it. Now let's take a look at this chart, and you can see here what I liked about it and what I clearly don't like about it. Too big. Since it bottomed on its earnings report, so that's always a good sign. It means market decided it didn't need to go lower after studying what they had to see, and it had a couple of nice days, including these 2 big volume up days. This reopening on the COVID pill, all reopening plays had a great day on Monday. By Friday, they pretty much gave it all back. But this strong break on 146% above average volume, typically a great sign for any stock that you want to own, got above this 232 prior resistance, feeling good about Boeing. That lasted for all of about 12 hours as it broke below the 200-day. Then the next 2 days trying to get back above the 200, it failed. And now today, more reports that they're having problems in production with their Dreamliner. Boeing down 5.8%. We hit our 8% stop on that, pulled the ripcord as it broke below the 50-day moving average. So taking a loss on Boeing and moving on. I talked about buying Unity. We'll take a look at that chart really quickly. Now, the metaverse is extremely hot. We booked some big gains this week in Roblox. These two software companies, Unity and Roblox, are the leaders in metaverse development. In this, we sold into some strength, some offensive selling as we got over 35% extended from the 21-day moving average, and then on today's pullback to the 8 on Unity, just spreading the wealth around a little bit. When it held at the 80 EMA on a pullback today, we took some of the profits from Roblox and rolled it into Unity. So those are the 2 main software stocks from a metaverse development standpoint that we're excited about and have positions in right now. What was strong today? Solar, NASDAQ 100, as I mentioned, software and builders continue to just rocket. Extreme weakness on oils, banks, uranium, and retail after a strong week. So back to the S&P 500. We closed right below 4,700. Couldn't hold that 4,700 area this week. And again, 47.18 to 20. Being resistance, solid resistance, but we continue to trend higher above this thin purple line, the 80 EMA. That's as bullish as it gets when you're trending higher above the 80 EMA. We broke briefly below it last week, only for a couple of days to get right back above it and then continue to ride that momentum higher. You can also see here the 21-day moving average. We are 1.3% above that, as that's providing a nice reference point for the uptrend in the S&P 500. We got the 50-day moving average here up to 45.11 now. This clears 45.46. That means that the 50-day moving average is above the prior breakout area. That's bullish. Any pullback into that area, we'll see 2 levels of support, and that certainly helps the bulls. So here's the key levels that we're looking at. As I mentioned, we're at 46.98, rising nicely above the 80 EMA. We've got the 21 a little bit further down, the 45.46 all-time high, and the 45.11 rising 50-day moving average. Worst case here, we break below the 50-day moving average and get back into this prior range of 4,300 to 4,430. Now, the 200-day moving average is coming up to this prior 4,280 to 4,300 area that was the bottom of this correction. So again, that's positive. If we get back up to this area, and we should break down and pull back, well, most of our stops will have been hit. That's 10% lower, but it should provide an additional level of support on any pullback. So that's 42.74 on the 200-day moving average here, 10% down. So keeping an eye on these levels. Break the 21, we take some off. Break the 50, pretty much everything's out. The individual stops in our individual positions, the market will take us out. We don't guess tops or pick bottoms. We go by price and volume. And then for the longer range, if you've seen the bull market study that I did, and if all you did was stay in the market, if you were above the 200-day moving average and exit on a weekly close below, your worst drawdown going forward from that would be about 10%. Right now, we've got about 5.6% at risk in our internal portfolios in GROTECTION. So those are the key market facts. Let's get back to the charts and dig through these a little bit. The leader right now, NASDAQ 100, all-time highs. What's there to say about all-time highs? Nothing bad. I know a lot of people are talking about how thin the market is because small caps and mid caps have been lagging, but stay out of laggards. That's all I can say. We've got big tech exposure, and we've got select exposure in some leading metaverse stocks and chip stocks, and they're acting very well. Here's the Dow with its first close below the 21-day moving average, which has now rolled over. Definitely something we want to keep an eye on that. The weakness in banks, oils, and industrials. And again, the strong dollar is definitely hurting the Dow. Mid caps continue to hold up above the 21-day moving average despite 3 straight down days. IWM, small caps, 3 straight down days too, but much more severe, piercing their 21, and the 21 has rolled over now. Also broke below the pivot here. Hunter mentioned how critical this 21 level was for mid and small caps in his Thursday video. We've broken back below this 233 pivot here too, although we're very close to it. So something we want to keep an eye on very clearly. And segueing from small caps, let's go to the G5, the IWO component of it's 1/5 of the G5, and it's the growth component of small caps. And you can see no strength at all over the last 2 weeks. Again, a break below the 21 on this also. This never broke out because growth leaders were lagging for quite a substantial period of time. Let's briefly take a look at the IWN value portion. Stronger, but still lagging, and also closed below the 21. So that's the first component of the G5 is IWO. Next up is FFTY. This is the IBD 50 leaders list. You can see 2 harsh days last week, but it bounced from there and is holding the 21 nicely. So we got a positive here and still an upsloping 21-day moving average. So it's not all bad in G5 land, but IWO, and soon you'll see the worst of the 5 also. Let's go to QQQJ next. This is a mid-cap NASDAQ 100 sitting right on the 21. Certainly has underperformed over the last 3 days, but still above the 21 and really sitting right on this 35-38 pivot breakout. PDP is a momentum, Dorsey Wright Momentum ETF. This is really the best looking chart of them all, continues to trend higher along the ADMA. Now let's get to the worst of them, ARK-K. I hear a lot of growth people just saying that they're taking cues from ARK-K, and it looks so weak that they don't want to be dipping their toe in the market. Now, I don't understand that because, for one thing, this is an active ETF, and if the person picking the stocks is going through a slump, it's going to be reflected in the chart, and that's certainly what's going on here. Accumulation distribution rating of an E below the downtrending 2150 and 21-day moving averages. It doesn't really get much worse for a growth ETF, and it's not really reflective of what's going on in our portfolios. So, and now here's why. The top 10 of ARK-K, there's 10 stocks that makes up 53% of it. Take a look at these garbage charts here. I'm not questioning Cathie Wood. She's been very successful, but these are dogs, plain and simple. Teladoc here below the declining 200-day moving average. I don't want to be anywhere near this. This seems like it's a commodity. I don't know that they have anything special, and the street agrees with me right now as this is 50% off of its highs. The second weak stock, Zoom, ZM, again under a declining 200-day moving average. This is something else. We're filming this on GoToMeeting. My wife uses Microsoft Teams. I know a lot of people use Zoom. I also hear a lot of people complain that it takes a long time to convert the videos in Zoom, but none of that matters. What does matter is the price and volume action. They gapped down on their last earnings report, and they're trending below all of the moving averages. But again, this is a top 10 component in the ARK-K fund, along with Roku. Everybody loves Roku. I don't love it. 490 to 234. That's a 50% drawdown too. It doesn't matter how great the fundamentals are on this. The price is not supporting the fundamentals, and therefore you should get the heck out of the way. And also Path, they own. Recent IPO. An IPO that's near all-time lows is not anything that I want to associate myself with. So let's just say no bueno for those stocks that are. That's 4 of them. I'll quickly go through the rest of them. There are some decent charts in here, but if you mix in garbage with good stuff, you're going to be mediocre at best. And Square is another one that's recently broken down below the 200-day moving average. That's not doing it any favors also. Some things that are acting pretty well, Spotify, above the 200-day moving average is the best thing you can say about that, but it dropped from 305 to 260 recently. Let's see if that can hold the 200-day moving average. Shopify, great day, or actually a great week, although pulled back hard after that attempted breakout today. Of course, they've got Tesla as their biggest holding, 10% of the portfolio. We own this also. We own it because it looks good and it's working, so no issue with that one. We also own Unity, which is another a stock that I just mentioned and is also a top 10 position in there. And we also own Coin along with Cathie. But again, these are the good charts. This is putting in a nice handle as it rounds out and tries to create this a cup and handle formation going all the way back to April. So those are the uglies within ARK-K, as long as the pretty good looking ones. So a little bit of a mixed bag there, but no secret as to why ARK-K is lagging. So let's get to the 21 over 21 leaders list right now. First of all, let's talk about what we punted this week. 2 stocks. SU, as oils continue to go to hell. This is still the best looking oil chart, and we're still holding it as it's just a couple of 0.1% below the 200-day moving average. All the other stocks that were in our top 5 in oils all broke the 21 decisively this week, and the other one that we punted was CBRE, as real estate had a tough week. Closed not only below the 21 but below the 50. The 2 that we added, same drill as always. We've got 13 in sectors and 17 industry groups here. If it's flagged, we own it. Yes, we eat our own cooking here, and this is really the primary list from which we're pulling potential stocks to own, and there are some I really have my eye on that I want to get into. But let's get through the 2 that were added this week, and they're 2 that we own. We got back in Tesla after getting stopped out below the 21 while there was some big distribution going on while Elon was selling. His selling isn't finished, but the downtrend in the stock continues to be finished for now, and as long as it stays above the uptrending 21, we'll stick with it. And the next one that was added was Nvidia, which we had owned and just had a fantastic earnings report with a gap up and a day 2 higher high. This is the premier chip stock for the metaverse also, so looking good there. So those are the 2 new additions. Now we'll just scroll through. The remaining ones I already mentioned. We had Roblox. We took some offensive profits in this as it got ridiculously extended today, and I mentioned we rolled some of that into you. Look at these blue volume bars here. Ever since it had this 1,000% above average volume breakout from this flat base on its earnings report, that just looks fantastic. You've got the trade desk. I'm looking for a low risk entry into this. Broke out, hit plus 20% within 2 to 3 weeks. Franco-Nevada, also AU is a decently strong gold stock that could be in here also, but FNV still hanging on to the 21 just barely. Zscaler, another one that's just incredibly strong, riding the ADMA higher. Airbnb bounced off the 21 today. That's what you want to see out of a leader. Coin, we own this. It undercut the 21 but got back above it. That's again what you want to see out of a leader. Snow continues to just be an absolute beast, although it's running into resistance around that Livermore 400 area. NUE, the strongest of the steel stocks, not making much progress, but forming this nice handle in a cup and handle base. Enphase, a beast, all-time highs since its monster earnings gap up. Dexcom continues to trudge slowly higher, both on a price basis and a relative strength basis. JB Hunt, undercut but reclaimed by the end of the day, the 21-day exponential moving average. Live Nation tested the 21, bounced off of it today. Silvergate, big day today, up 10.6% as it bounced off the 21 yesterday. Ethereum, 3 rough days under the 21, but closed the week back above it. That's resilience that you want to see in a leader. SBNY, one of the strongest of the banks, really just kind of going sideways, but it's going sideways riding the 21 higher. Net, one of the top 3 holdings in GROTECTION, down today, but continues to ride that ADMA like a champ. Bill, kind of weak, no relative strength over the last 2 weeks since its earnings gap up, right near the bottom of that earnings gap up day, holding on by a thread. Ambarella, another top 3 holding in GROTECTION, sitting right on its 21, which has contained any pullback that it's had since its big volume 1,270% up day. That was volume up 27% on 9/1, looking great. And finally, Datadog going sideways after its second earnings gap up, and that's going to wrap your 21 over 21 list. As always, like to hear from you. Portfolio, from a portfolio standpoint, I think I've pretty much discussed in the videos what we added this week. FAS, that's not really acting well, but we're still holding it. We got stopped on Tesla, but back into it. We dumped Boeing, got stopped out on Bros, added new, added coin, got stopped on CBRE, got stopped on MSOS as marijuana just went up in smoke below the 21 and below the 50. And that's it. We added you and got back into Tesla. As always, love to hear from you. I'm on Twitter at dvandenbord, email don@revereasset.com, or phone 855-REAL-WEALTH. Wrapping up the week ending November 19th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.